Well, welcome to the Best U.S. Investors Two Regular Guys show. I'm Trent. This is Mark. And today we are going to discuss Warren Buffett's selling of positions, his massive holding in cash, and why is he doing this? And as we lead up to earnings for Berkshire Hathaway, what should we expect? So let's get to it. Well, Mark, your homeboy there seems to be making some big cash moves. What's
Yeah, it's
up?
well, the Oracle of Omaha, and he's a value investor, and he goes by certain indices, and obviously he can't find anything of value right now. So the 13 Fs came out last Friday,
Uh-huh.
Valentine's Day, among everybody. You can see who's buying and what. And I
Right.
always kind of watch what Warren does. He's down the road, and I'm a full disclosure. I've had Berkshire Hathaway forever, uh, and it's a unique company. And you can't argue with his results, okay, for over the last whatever 60 years or whatever he's been doing this. So today I thought we'd talk about what does Warren Buffett know, okay?
Right.
Because we talk a lot about these CEOs, NVIDIA and Microsoft and Google, and when they sell their shares of their own company, what does that mean? What would force them to do that? Well, these
Right.
guys know more than we know. So what can we get out of their knowledge and what they're trying to tell us? So I just wanted to go over the 13F a little bit, in
Okay.
advance of this Saturday. They're going to put out Warren Buffett's annual newsletter, okay, for the year, which I enjoy watching. I enjoy reading. It's almost an annual event. I get up, get my coffee, I go out to the computer, I print off his letter to the shareholders, and I read it. It's
Yeah.
not only is it entertaining, it also is educational. And he's been doing it for years and years and years. And then they'll go over their corporate yearly uh, books and earnings results. So it's always fun. So I thought we'd talk a little bit about what he's done so far and what we can reap off that a little bit. So
Okay.
let's get going a little bit. So Warren Buffett, as everyone knows, is one of the world's top value investors. His investment philosophy focuses on buying undervalued companies with strong fundamentals and holding them for the long term. This strategy has been proven to be highly successful over time. Over the past 50 years, Berkshire Hathaway has delivered exceptional returns, okay, significantly outperforming the S&P. Berkshire Hathaway has generated an annualized return of roughly 20% since 1965, and that's when Warren took over. The S&P has historically averaged an annual return of about 10 to 11%, including dividends. So he's almost doubling the S&P since 1965. So he does have
Wow.
a history. And this is largely attributed to Buffett's investment acumen and the unique structure of Berkshire Hathaway. So he's definitely someone that has the experience. He's slow to move on technology. It took him a while to buy 100 shares of Microsoft because Bill Gates talked him into it, and to get into Apple, which I think were his underlings who got him into Apple, which turned to be out to be a pretty good trade. But he did all this without really following the dot coms or following the Mag 7. So when you think about that, that's quite amazing. So if you were to describe Berkshire Hathaway, Berkshire Hathaway is a long-term holding for me. If you describe their business, some might argue it's an insurance company. It's a big part of insurance. Geico, they have a General Re, all these companies in insurance. They take those premiums of the insurance that you pay in, and they take that out and they invest it in companies, or they invest in buying companies, or they throw it in treasuries. That's where the money flow comes from. It's a good business. But
Huh.
there's a case to be made for calling it a railroad company. They own Burlington Northern Santa Fe outright, okay? And a utility. They own Mid-American Energy, which has wind turbines and energy out here through the Midwest. Uh, and a retailer, okay? A manufacturer, a chemical company. They build houses. So at the end of the day, it's most appropriate to use the term conglomerate when you talk about Berkshire Hathaway. That's because it owns business across all sectors and more. And everyone thinks, that Berkshire Hathaway, they have their staples, and we'll go over that in a minute. But he will get in and out of a business depending on how they operate and where he thinks the economy is going to go. So this is a very unique business that Berkshire Hathaway has. That's the result of Warren Buffett's investment approach to simplify things. He's looking to buy well-run companies, but they have to be well priced. He doesn't chase price. He looks at valuation. Okay, and
Right.
that's the key to his value investing. So Berkshire Hathaway doesn't have to pass anything on to the shareholders either. So cash flows from these companies that he owns or the investments that he owns, they throw off money to Berkshire's balance sheet and give him a cash pile that he can use to invest into more companies. And that allows Berkshire Hathaway to grow over time via acquisitions. On top of that growth is achieved in businesses that it actually owns. Okay. In the company's 2023 annual report, which the new one's coming out this Saturday, he wrote, this was in 2023, there remain only a handful of companies in this country capable of truly moving the needle at Berkshire. And they have been endlessly picked over by us and by others. Some we can value, some we can't. And if we can, they have to be attractively priced. Outside the US, there are essentially no candidates that are meaningfully options for capital deployment at Berkshire. All in all, we have no possibility of an eye-popping performance. Okay, that was in
Wow.
2023. Telling me, when you think about it, the S&P has returned 25% in 2024. It returned 20.7% in 2023, and it's up another 4% this year. But Berkshire Hathaway hasn't joined the party yet and continues to be a net seller of stocks. And people are like, laugh at Warren. Oh, he's old. He doesn't know what he's doing. He's lost, faith. Buy the dip and all that. But again,
Right.
you cannot argue with his success. So Buffett, who oversees $300 billion equity portfolio, is unenthusiastic about equities with the S&P hitting new highs. And the company's 13F report on its fourth quarter equity holdings released last Friday showed that Berkshire was a net seller of about $6 billion of stocks in that period. The pace of sale lightened from the first three quarters of 2024, when Berkshire had net sales of 127 billion of stocks. In those 9 months, Berkshire bought just under 6 billion of stocks and sold 133 billion of stocks, and that was mostly Apple. There
Wow.
was only one notable new purchase in the fourth quarter, and that was about $1 billion of Constellation Brands. That's a wine, beer, and spirits company. Berkshire
Yeah.
sold about $5 billion of Bank of America, unloaded $3 billion of Citigroup, and didn't change its Apple stake, which remained at 300 million shares. The Citi stake is nearly gone, totaling about 1 billion now. Some investors thought he may make Citi a major financial holding like Bank of America after buying about 3 billion of the banking company, but Buffett went in the opposite direction. So why is he selling banks? If you look at what's happened recently in the banking and financial sector, it's gone skyrocketing. Okay,
Right.
everyone thinks that interest rates going to stay the same. Banks are going to do why? Why would he sell? He loves Citi. He loves Bank of America. He still owns it. But could it be credit card debt's building up? There's going to be a write-off. Could it be that there's issues with commercial real estate coming up? What does he know? What do you think about that? What do you think about the financial side, the financial stocks that he's getting unloading instead of buying?
So, so I guess my thinking is that how does a bank, number one, how does a bank function? How do they make their money? They make their money on lending. They make their money. They don't make money on you having a checking account and you getting paid, charged $15 for a checking account. They make money on lending. So what have they been doing for 4 or 5 years? They've been lending. They lend through credit cards, commercial loans for commercial property or commercial equipment, residential, residential or you know, individual loans, stuff like that. And
Housing,
now
yeah.
you're and now you in that well that paid for all those loans has dried up, meaning your mailbox check you no longer get that. And now interest rates have gone up, so it's getting harder to pay those credit card payments. And people are tight on money because cost of living's gone up. You and I've talked a lot about that. So I gotta believe Warren's looking at this and going, these guys are seeing bigger and bigger spaces between the time they receive their last payment on a credit card. And so that delinquency rate is skyrocketing.
Time.
I think
Yeah.
it's actually at all-time highs ever. So I gotta believe Warren's looking at this going, nobody is making enough more money so they can pay down their debt, and the interest rates on a credit card is like 30 to 35%. And that people are just going to give up paying. And then it's going to lead to commercial real estate. And then it's going to lead to residential. And they're not, they're, they're not buying homes. I think I saw a headline today on CNBC where you saw a 6% decline in home purchasing, something of that sort. I mean, it just seems to be all adding up. And Warren's been around the block a number of times to see this is what, when this happens, then this happens. And he's holding the bag with two big companies in Citi and Bank of America.
Yep.
And so he
Well, I
just
think
like,
that's
I'll
so.
just bail them out.
And yeah, he'll wait and he'll buy them back like he did, during the great financial crisis. He'll
Yeah.
go in there and, bail them out, and he'll get 6% until they have to sell him back stock at, 2 times what the value of the stock is. And,
Yeah.
that'll be the way it goes. And if he's probably looking at their balance sheets and looking at their earnings calls and earnings and saying, hey, what's this big pile of money you've got off to the side to play for delinquent loans? Okay.
Right.
Which we've been seeing in banking areas. So, again, he may be old, but he's a sly little fox.
Yeah.
So if you look back though in 2024, he wasn't just selling stocks. He did buy some stocks. He bought Chubb. Okay, he bought Occidental Petroleum, Series XM Holdings, Domino's Pizza, and Constellation. These weren't very large purchases for him, but they were purchases. A lot of them think that it was his underlings that was causing him to buy some of these. I know when you think about it, Occidental Petroleum, he believes with this new administration that energy is going to be pretty hot coming up. Series, Domino's, and Constellation are really companies that face the consumer. And you think about it, those sounds like things that people are going to stay at home, eat pizza, drink beer, and listen to Sirius XM. That's what I get out of it. That's where he's heading again. What do
Yeah.
you think about that?
Yeah, a friend of mine during the housing crisis, his family owns a Budweiser distributorship. And I asked him, how you guys doing? He goes, we're great. Our sales are through the roof. And then for another friend of mine owns a dish network distribution company. How's your business? It's great. No, we haven't seen a blip in our books. And then I go to church and all the pews are filled. What happens during recessions? People drink more beer, they watch more TV, and they go to church.
Yeah.
So I can understand the whole move to Constellation Brands to buying a Domino's, and
Yeah,
yeah, makes a lot of
this
sense.
isn't his first rodeo in all this. So,
No, and he did something similar to this prior to the housing market
oh, he did, yeah, and he did
debacle.
it during .com too.
Yeah, yeah.
So during December ending quarter, 5 existing positions were added to, 1 new position was made, 9 existing positions were reduced, and 3 holdings were given the heave ho. Berkshire's $267 billion investment portfolio consists of 38 companies, down 2 from last quarter. Berkshire was likely a net seller of publicly traded stocks during the quarter. Top 5 holdings in order of size of holdings are Apple, American Express, Bank of America, Coca-Cola, and Chevron. The top 5 holdings account for almost 71% of the total portfolio, down from 76% in the first quarter. The one that he did add, Constellation Brands, okay, had a value of over 1.2 billion and the 19th largest holding in the Berkshire portfolio. Berkshire added to its positions in Domino's Pizza, Pool Corporation, which makes swimming pools, which again is at home, Occidental Petroleum, VeriSign, and again, Series XM. Berkshire reduced its positions in T-Mobile, Charter Communications, Liberty Media. So it doesn't look like he's thinking about media companies and communications doing so well. Formula One and Louisiana Pacific. He got rid of Ultra Beauty, okay, which he bought a while back. Also holdings, and he got rid of, this is interesting, he got rid of his holdings in the Vanguard S&P 500, the VOO, and the S&P 500 SPY, exchange traded funds. He got rid of them all.
He knows.
Okay. Two of these index funds, okay, the VOO and the SPY, have historically been surefire investments for long-term investors. While Buffett shies away from giving specific investment advice, he proclaimed during the Berkshire 2020 annual shareholder, in my view, most people, the best thing to do is own the S&P 500 index, and he just sold out on all his. So
Yeah.
hypothetically, if an investor had purchased the S&P tracking index at any point since 1900 and simply held the position for 20 years, they'd have generated a positive total return. But despite being historically flawless investment, Buffett dumped the Vanguard S&P 500 and the S&P 500 SPY Trust in December, in the December ending quarter. The move to jettison two undeniably successful investment vehicles is part of a bigger theme of selling activity for Warren Buffett. Even though Buffett remains an unwavering long-term optimist and would never bet against America, he's now been a net seller of stocks for 9 consecutive quarters dating back to October 1st, 2022. Excluding
Wow.
the fourth quarter of 2024, Buffett has overseen 166.2 billion more in stocks sold and purchased over a 2-year span. Selling, he's building up a cash pile. That's 326 billion he has in treasuries. So it's
Wow.
likely we're possibly witnessing Buffett being fearful when others are greedy. Okay, and that's what he's always said. So Warren Buffett, he's unwavering as a value investor. No matter how wonderful or time-tested the company, he's not going to buy it if he doesn't believe he's getting a good deal. At the moment, the stock market is at one of its priciest valuations in history when back-tested to 154 years. So let's take a look at the few indexes which Buffett may or may not be considering. And the first is the S&P Shiller PE ratio. The S&P 500 Shiller PE, which is based on average inflation-adjusted earnings over the previous 10 years, inflation adjusted, closed February 14th at a multiple of 38.54. To put this figure into context, it's a stone's throw away from the highest reading of 38.89 during the coal market, but more than double the average of the reading of 17.21 since January of 1871, and the third highest reading during the continuous bull market spanning 154 years. When back tested to January of 1871, there have only been 6 instances, including the present one, where the Shiller PE ratio has surpassed 30 for any notable length of time. Following the prior 5 occurrences, the S&P 500 and or the Dow Jones Industrials lost 20 to 89% of their value. Okay.
Wow.
Second indicator we've talked about, and you've talked about, the Buffett indicator. The Buffett indicator recently hit an all-time high. Named after Warren Buffett himself, the Buffett indicator divides the total market cap of all publicly traded companies in the U.S. into U.S. domestic gross domestic product. While this ratio has averaged 85% since 1970, it's reached an all-time peak of 207% in January of 2025. In other words, Buffett is selling historically surefire index funds because the stock market is historically pricey and the value is becoming difficult to find. Again, Berkshire has regularly used short-lived periods of panic and price dislocations as an opportunity to put his company's capital to work. This tried and true method of waiting until valuations make sense has been working for decades, and Buffett has plenty of dry powder at the ready to take advantage of the next meaningful stock market correction. So, is Warren Buffett out of step with the rest of the world? So Buffett has been out of step with the markets before, including during the internet bubble of the late 1990s. He is vindicated then and could be rewarded once again. Buffett doesn't see anything needle moving worth buying right now while the market is hovering near all-time highs. But if there were a bear market, that situation would likely change. The cash he's building up now could be put to good use when valuations fall, giving Berkshire Hathaway more opportunity to create additional millionaires. Berkshire's investors don't seem to be upset about the mistimed sales and missed buying opportunities, particularly among the Magnificent Seven stocks that have led the market. Berkshire owns Apple, having bought it from 2016 to 2018, and has a small stake in Amazon. The Berkshire Class A shares, which ended Friday at $719,000. Okay. Can you imagine that? Okay.
The Class A is at 700. Holy cow.
And 19,000. I remember when I was in college in the early 80s, the stock was at around $3,000. Think about that return. I mean, crap.
Wow.
So their shares, which ended Friday at $719,000, are up 6.5% this year, about 2 percentage points ahead of the S&P. The stock roughly matched the markets last year.
Huh.
So Berkshire Hathaway is a long-term investment. Buffett's approach is meant to create increasing wealth over decades. The best time to buy Berkshire Hathaway will probably be during the bear market, which, as it were, will likely be when the company starts investing too. You can stomach taking a contrarian approach. However, Berkshire Hathaway could easily help you build a 7-figure portfolio, no matter where you step aboard. So, it's just one of those iconic companies out there, and you've got a guy who's 94 years old, running
Yeah,
the company. He seems to be still rolling pretty good. Uh, I don't agree with everything he does, but I tell you what, I've been a shareholder in the meetings I've gone to and things I've read when him and Charlie Munger were running it. It's all about shareholder value. And it's all about we do things because you're our family. I mean, you go to a meeting, you feel like with the 15,000 people there from all over the world that you are part of the family. But getting back to the rant that I have is uh, here you got one of the best investors in the world, and he's not buying stocks like everybody else. He's selling.
right. I don't think Warren is alone. Um, I think some of the big boys like Vanguard and BlackRock and State Street see the writing on the wall as well, and they're doing the same. They're potentially raising cash or divesting themselves of stuff that is overextended, in particular the tech sector. So wouldn't surprise me if Warren's just the one on the headlines, but there's a lot of big institutions doing the same thing. Because he's right. I mean, you think about it, what's the valuations of a lot of these companies is just astronomical.
Well,
And
CEOs like Warren, Elon Musk, and
yeah,
Nvidia CEO and Zuckerberg, they're selling too their own shares.
yeah. And oftentimes I look at that and I go, okay, maybe that is just a wealth management, risk management process where now my wealth has gone from 1 billion to 50 billion, and the majority of that is sitting in my company's stock. It's smart to diversify. I would think
Think,
that would be
think about
one
that
reason
though.
to do that. But the
But
second
think
reason
about that.
is
You're in charge. You know what's going to happen down the path. So
true,
if I think things are good in my stock and I look around, is there anything better than my stock? No, because we're doing good and the future looks good. I'm going to double it from there. You wouldn't sell it then, right?
true. So, okay, here's just a thought. We've mentioned NVIDIA has done a lot of their C-level execs have only been sellers in the last 12 months. If you look at it, their stock price in the last year. So what is this? Today is February. So if I'm looking at um we'll just go to March. Sorry, I'm looking at a monthly chart here, just real quick. Uh February um of 24, the stock price closed out at $79.11. So they've been selling into that move from last February into, I think May and June was when we saw a lot of NVIDIA selling. So if I'm going to look at June of just say July, the stock price closed at 117. Today it's trading at 140 bucks. So they really haven't missed out on all that much.
Well,
But
consider what's their cost basis of their shares at $2 a share,
yeah, it's
and
something ridiculously low.
yeah.
But the point is that they've been selling since the summer, and they gave up roughly what 20, 30 bucks, $20 a share. They know they're going to be able to buy it back at a lower price. So they knew, at some point I got to start unloading a lot of this. So, and they have to do it over like a period of time, because if they went in and said, I'm going to sell 100% of what I got, then that's going to spook the market. So I honestly think they know this is slowing. They know they're going to get into the first half of this year, or second quarter of this year, third quarter of this year, and their revenue and earnings per shares are going to be low. Warren Buffett just looks at everything and goes, I'm going to start early. I'm going to start raising cash. And he
Well, the
started
other
what,
th
2 years ago?
the interesting thing about Buffett is he has in his portfolio a wide variety of
Yeah,
industries throughout the world and country to look at. He's got railroads, he's got energy, he's got
yeah,
home building, he's got insurance, he's got banking. He can see he can see all the instruments on the gauge of the plane. He's not
right.
just looking at semiconductors or automobiles.
Yeah, Yeah, he's looking at Apple going, this is my largest holding all of a sudden. This thing could go in half in a heartbeat. Hell no, I'm not going to participate in that. I'm going to take my profits and go wait to buy it back.
Yeah.
So it's a good lesson in overall wealth management, in my opinion, is that he looks at it and goes, this is my process. I'm a value investor. These companies are no longer of value. They're overbought. It's time to take my profits and walk away and wait.
Yeah, and I think the key is most people think,
Pardon me.
oh, he's an investor, or I'm an investor, I just buy and hold. Well, he doesn't buy and hold.
No,
Okay. The largest value investor in the world, he'll get rid of stuff because he wants his profit.
most focus in on he. I've seen that interview where he says, just buy the S&P 500, right, and hold it. He sold it.
Yeah.
He sold it. He looks at it and goes, 40% of that move in the S&P 500 on average the last 12, 24 months has become 7 companies. He knows. He
Well, we all
knows
know.
something.
We talk about it all the time. We
He
just don't
does,
have billions and billions of dollars, and that
but
people
he
will take
takes
us
it.
serious because we're just two regular guys.
Right. He takes action. And he does it. He'll take the heat for it. Oh, you missed out, Warren. Apple's doing well. I don't care. I'll just buy
He
Apple
doesn't.
outright at some point.
Yeah. Well, he's not looking to buy at the top, but he is looking to buy good companies at a lower valuation,
Yeah,
and hold on to them to a point where he thinks they get overvalued, and that's when he gets rid of them. He has a
yeah,
process, and that's what we try to do, with Best of Us investors is have a process, have a trading plan, have an investment plan. If you
absolutely.
don't, you're just kind of shooting from the hip.
Yeah, buy and hold, and it'll take care of itself over the next 30 years. Not in this world. You gotta look at a little bit more, a little bit deeper, and that's what we do. Yeah.
Yep. Yep.
So
So anyway,
very
I'm
cool.
excited this Saturday, it's coming out with his earnings and his shareholder letter, and I'll be sitting here with coffee, reading it anxiously and laughing and enjoying it
Yeah.
as a shareholder.
I'm really
Hopefully,
curious of his commentary about the economy, if
yeah,
he puts that in. Because he's shooting straight with everybody. He'll tell you. Um, that could move markets on Monday easily.
yeah,
Yeah.
yeah.
Well, cool, Mark. Well, that is, I think, a good subject matter. I think Warren he's a legend, and I
Oh,
mean,
definitely,
shoot, 20% plus returns since 65. I mean,
yeah.
he's one of the top. So
Not,
pay
not
attention.
bad, not bad for a textile company, huh?
Nope, not at all. Well, all right, Mark, we'll wrap it up there. And if you like this video, please hit the subscribe button, hit the like button. It really helps us out, spreads the word. If you would like to learn more about what we do at Best of US Investors, hit one of the links below. You can learn about our different platforms. We have all different price ranges, and we got something in the works that you'll probably see something about in the next couple weeks. That is really informative. So, anyways, check us out, like our page, learn more about us. And in the meantime, between now and next week, have a wonderful week and be safe and always live loud. See ya.
And cut.